Hello, everybody. Good morning. How's everybody doing? Yep. Starting a little bit early. Might as well. Might as well look at some different strategies that we can do for this sinking ship. But I have something in mind. Yeah, markets are down again. I don't know. I think probably that it will be once the speech is over, it'll be more of a weight off of everyone's shoulders. Because eventually we're going to get to a point here where these growth tech stocks are going to be cheap enough where people will start to be transitioning back into them again. I mean, this is not the first time it happened, and it's not going to be the last time it happened, but I remember in September also something similar. So, I mean, let's take a look at it. This was the Corona crash, and then we had another one here. Let's go over to the day chart. So, yeah, this was the one in September, and that's when they started transitioning out of tech and into the traditional. I mean, but also there was some sort of crash, some sort of mini crash. But I remember that, and people were talking about, oh, they're transitioning out of tech. It's not going to be until after October until they get back into it because of the holidays, the what you call it, holiday season. Start buying the um. Sorry, trying to set this monitor up. I can see the chat. Yeah. Anyways, you guys get the point. This was the one from September. It went from 358 down to 321. So that was a decent little dip. And then there was one from mid-October down to about Halloween. That one was painful for me because that was my birthday. Other than that, I mean, we're doing all right. Like right now, we're only right here. So everybody needs to not panic, although kind of stings, not gonna lie. But it's not so bad. I mean, this is S&P 500, so obviously that's not as bad as tech is right now. But you know, what are we gonna do? It's just like that. So they're transitioning out of tech right now. But it's happened before. But yeah, I mean, this one definitely seems a little bit worse than the one that was on January 25th, 26th. We had 1, 2, 3, 4, 5 days down. So it's very similar. 1, 2, 3, 4, 5 days down as well. So let's see. But I wouldn't be surprised if today is not going to be good. But anyways, it already looks like that. Yeah, Dow Jones is up. I totally have a Dow Jones 3X ETF, but it's not gonna. Yeah, it's not gonna save my portfolio. But I mean, I've got some money in it. I'm interested in O. Okay, so it's pulling back. What was my limit order, anyways? My limit order was 60. Okay. Might not even hit that, but anyways, we'll see. But those are like the REITs, different real estate. Um, yeah, definitely more of a correction right now. I mean, I don't believe that this is the beginning of a crash, but just because they're printing more money, they've got the stimulus coming out. People are just a little bit worried about the speech and I think it's 2:30 p.m. Eastern time. So we're not gonna know for a while. Yep. That's the golden question, when it's gonna stop going down. I think just going off of the past, which is not necessarily reliable, but what else are we gonna go off of? So if we look, if it's a mini one, a mini correction, which is very normal, there's obviously been weeks where it's gone down. It's not anything crazy, although this one is a little bit worse than the one on the 26th of January, because it has broken this support. But nevertheless, and also pre-market is down more too. Keep that in mind. So let's see. Yeah. Oh, it was definitely worse than this one, but that's okay. It's more along the lines of something like this. This one dipped down a decent amount, and then it went a little bit flat before it fell a little bit more. So I would say we'd be lucky if this started trading flat right now, to be honest with you, which it's possible. This is on the hour chart, but there's not much we can do. So, in like we were talking about yesterday, um, yeah, well, yeah, I'll expand on that soon. Beach is at 2:30 Eastern time. So what we were talking about yesterday was during times like this, it's a little bit painful, but um, this happened before, as you can see. This one is not that bad compared to the one in September and October, the one in September and one in October. So we're kind of just gonna have to sit tight and hold on for the ride. Um, Mr. Snoots, that's a great question. What would you look at buying today if you only had $1,000 and were going to hold for 2 years? I would buy growth tech because that's the biggest discount, or semiconductors. So I would buy SOXL, or I would buy either TECL or TQQQ, because that's only $1,000. So you might as well go for the 3x leverage one, in my opinion. It starts in an hour and a half, really. I thought it was 2:30. I just googled it too. I could be wrong. It would be cool if once the okay. So best case scenario is because the this negative the negative news, the negative speech, the possibility that it's going to be negative is getting priced in right now. So the best thing that's going to happen is if if the speech is priced in, and then they're going to after the speech is finished, and then it starts going up because everybody's like, oh, okay, everything's going to be fine, and the market starts moving back up. So that's going to be the best case scenario. Then the worst case scenario is he says something stupid that's not going to affect our portfolios. But we'll see. I mean, I know I wouldn't really expect that. I still have 10% of my portfolio available for investing. Should I hold off? Yeah, I would wait a little bit. It's only 10%. I mean, basically, what you could do about add in 2 to 3% per day, I think. And then, you know, once you do that, and then it starts moving up in another couple months when you're making some gains on those positions, then maybe sell some to raise another 15% cash reserves. Pretty much like that. But I would wait. I mean, don't do it now. I mean, at least wait until after the speech. We are riding around that support on the triple Q. And we're gonna see if it's gonna hold. Good questions. That's cool if it starts in an hour and a half. Good morning, Darth Molly. How much did I start investing? I started with $500 in 2011. Technically, it was negative $500. Yep, yep, Ed. We're gonna talk tonight. Hopefully it's gonna be a lovely conversation and not a. Oh man, the markets just went down another 7%. Well, my portfolio did at least. My options didn't do as bad as I thought they were gonna be, but man, yes, those ARCs are really taking a hit. So it would be a good time to buy some of those. But again, I wouldn't necessarily do it right now. But some arc leaps could be interesting though. Yeah, I don't really think this is the start of a bear market. There's no reason for me to think that, because if you look at the charts, this has happened. It literally happens every month. Look, here's the one. This was the February one that we're in right now. There was one in January. There was a smaller one in December. I mean, also like a 2-day one, but that was a decent down day though. It was an even smaller one. You could argue that this was also one that was November, and this was the October one, run up to the election. This was the September one when they were transitioning out of tech, just like they are now. I mean, compared to this one was like pretty painful. That one was too, because my birthday was right at the bottom. I was like not feeling so good, but it is what it is. That was a painful one. Nah, I think this one was more painful, to be honest with you. The arc puts temporarily, I mean, just depends on how much they are. I don't know if it's worth it, because this is not like this is the first time this happened, so everybody should just calm down a little bit, in my opinion. But get some cheaper puts though for sure, and we're going to be looking at that as soon as the market opens. I'm even thinking about market buying like a couple $1,000s, because I've still got those orders in for the Dow, 2 of them. Those aren't going to hit. Maybe they would, who knows. And anyways, it's not even going to work very well, because the Dow's not the one going down, because this is not a market crash. The Dow is going up. It's not crashing, obviously. So this is just a transition out of tech from the Nasdaq to the Dow. I guess you could look at it like that. But yeah, we could look at the ARC puts. I mean, I don't know how far out you want to go. I wouldn't want to spend so much money. What can we buy this for? $67, $50 maybe? Maybe. Could buy 1 month out. I mean, I don't know. Not necessarily a bad idea if you're heavy in ARC. 332 days out. Man, these are some weird numbers. Queen Kathy just liked 96 or something. Interesting. But yeah, I mean, this one is $70, so it's doable. Definitely doable. And as you can see, it's up 13%. When ARC was down 5, the underlying was down about 5. Kind of interesting, I guess. But yeah, it just depends on how much you want to pay for those, to be honest with you. I'd be more interested in getting just tech hedges in general, because I don't know, I just think, and maybe I'm wrong. I'm definitely wrong sometimes, but I just feel like, it doesn't really matter. You don't necessarily need to hedge every single position in your portfolio, because if, like, for example, tech is going down right now, so just get a generalized tech hedge, cheap one if possible. Doesn't really matter. because if it goes down, you're going to be making money anyways. It doesn't really, you don't have to do exactly every single stock you have in your portfolio to hedge it, to buy those puts or whatever. So, I don't know. But, I just feel like we don't have to be so exact as long as we get something where we could possibly 50x if the market does crash. It doesn't really matter what that is, because if you put enough money into it, well, the money is money. So that's just my opinion. I'm not going to sit and go through every single thing I'm holding and hedging it. I mean, you easily could, though. I mean, it's not going to be that hard. You could, but just more or less type of thing. Like, if my portfolio loses, $300,000 during a crash or even more, I'm happy to just buy some put $10,000 in some put and make $200,000 back. So even if I just didn't lose all that I would have lost anyways, you know what I mean? Buy these lemonade dips. To be honest with you, we're gonna have to look at those because it's a tough one during one of these corrections. So yeah, if you're brave enough, go ahead. I'm personally gonna focus on my more important positions, and not that lemonade is not important by any means. Personally, love me some lemonade, but I'm gonna focus on getting more into ARK because, oof, they're taking a beating. It's literally down more than 10% in 2 days. So, and Tesla is just. I'm still up overall. It hasn't reached my cost basis yet, so. But I just had gotten more Tesla, and I wrote that article not so long ago, making a bullish case for Tesla, kind of following in the footsteps of Queen Kathy. So I mean, that one's hurting a little bit right now, but hey, it is what it is. Could have just waited. So now it's probably a really good time to buy Tesla because, I mean, I don't change how I stand. It's just not the best timing. But hey, we cannot time the market. So safest thing to do is common stock. Just buy the shares and dollar cost average in. I mean, if you have a job that you're getting paid a salary every month, hopefully you can take 30% of that, the money that you're making, and just buy leaps every month. Buy some NASDAQ leaps, buy some tech leaps, buy some whatever you want, every month, switch it up, get something different. Hopefully you can get ETFs because those are the most diversified, that's just safe things you can be doing. Or common stock, which would be even safer. But that would be the best thing that one could do right now. And that's the best thing that one could do during an actual crash, like 2008 type of crash. But so far we're not there yet. But I mean, 10% is like on the ARCs, for example, and also my poor SOXL. But it was a good question. I mean, yeah, ARK funds bought more Tesla yesterday, but I'm still concerned for sure. But it's okay. I mean, I don't want to buy any more, to be honest with you. I'm just gonna have to ride it out with mine, but it's still tough to look at. But it is what it is, guys. I mean, this is an amazing time to be buying. Now, if you have, if you have an extra, I don't know, let's just say $10,000 sitting on the sideline or whatever, don't put all the 10,000 in now. That's not smart because look, we've had 4 to 5 days of going down, and you can look at the other dips, and these are just corrections. You can see that it's not just one day it's going to be red. These happen. Don't be surprised when they happen. But if you got $10,000, you buy $1,500 a day, $1,000 a day, $2,000 a day. think about it by yourself. Decide what's best for you, but something like that, because then you're gonna run out and you can't buy the dip anymore. Not very many brave souls on this stream today. It's a big difference, but probably more people will join later. We were a little bit early today, but I thought we just start early, talk about it, because we're going down. But hey, this is not the first time I've had this feeling in my life, and I'm actually kind of used to it, to be honest with you, with Bitcoin. I was in Bitcoin really early, and it's all good. I've seen a lot worse than this. Speaking of which, Bitcoin is down a lot today, which is cool, because I want to buy some more. Although it is going up right now. That really sucks, because I was just like, oh man, Bitcoin or Ethereum is less than 2,000. It was about to break 2,000. I put some buy orders in for 1,800. And it passed it one day, and I was like, kept going up towards the high 1900s, and I was like, well, that kind of sucks. So I woke up one day, it was like 1930. It's a couple days ago, and it was moving up. I was like, man, I missed my chance at 18. I think it's gonna go ahead and pass 2,000. I was like, okay, this market bought like 2 ETH. Yeah, which is not that much money, only 2, but still, I did. I think I got them at like 1970 or something. I'm like, oh, oops. Then it crashed down, and just all of a sudden, past my 1,800, I still have those buy limits set for 1,800, and it just blew through those. And yeah, well, it is what it is. But luckily, I sold my Bitcoin, so excuse me, there is that. Yo, 15.28, but it was down to 13. Man, those are some pretty big corrections. So I mean, if you consider it went from 2,000 down to 1375, that's a pretty big correction, guys. So, I'm pretty, and that's worse than the Nasdaq is doing right now. But anyways, crazy stuff. That's why the whole Mar thing, everybody's talking about this, blah blah blah. Mar on the right. I feel like, nah, no thanks. Because I mean, look, Mar's down like 14%, and even Bitcoin's down what? Only 4. I just thought that's not a good idea. Those are just gonna get hit so hard. I mean, if you want something interesting to invest your fiat in, like Bitcoin or whatever, there's nothing wrong with that. It's just, how about GBTC? Where are you? GBTC. How about something like that? That one's not as bad. It's because this is the Grayscale. If you guys don't know, the Grayscale Bitcoin Trust. This is basically the biggest cryptocurrency trust, and they're doing well. I mean, I personally don't want to give my money to them, because I can do that by myself, invest in crypto. But you got to understand, a lot of people would be interested in having it, I guess you could say, professionally managed. But there's not really anything hard about it. You buy 60% of your portfolio Bitcoin, 30% ETH, and the rest 10 you split it between some smaller things. I mean, just a lot of diversification into the smaller coins, altcoins, and you let it ride, because that's pretty much all they're doing as far as I can tell. But anyways, I mean, this compared to, because essentially they're just holding the coins, and they're not doing a bad job. I mean, you look, doing all right. I mean, obviously anybody who's holding any coins is making a lot of money these days, but still, comparatively to the miners, I mean, that's not for me. I mean, for sure it's come up a lot, but it goes down more than Bitcoin would actually go down, because I suspect if this goes to 30, if Bitcoin goes to 30, I suspect a lot is not going to be profitable. And I cannot speak specifically for Mara or specifically for Riot, and I mean, there's a lot of other smaller ones. But I can speak for probably a lot of these companies, no matter if they're public or private, they're not going to be profitable. And even if they're still overall profitable, it will be at a lot less margin because they're older miners, the mining machines, like S17s, for example, they wouldn't be profitable. So there could be some sort of portion of the machines that are not. Oh, cool! You can put GBTC into a Roth. That's an interesting. That's interesting. Yeah. I got it. Maybe Iron Condors on Marn, right? Yeah, for sure. That's what I was thinking. But see, if we had done that yesterday, I mean, and if you guys were on the live stream at the end, you would have seen when we were doing like some like weird negative values, which I, to be honest with you, I've never seen before. We were trying to do that, feel like we found a cheat code or something, but yeah, that didn't work. So whatever. But yeah, I mean, if we had have gotten those, I mean, down 15% pre-market right now, 31. So by the way, it's not up here. You're looking at this graph and you're like, well, that's not so bad. Kind of what Bitcoin looks like. No. It's going down much further. It's just gapped down a lot. The 31. But that's cool. I mean, it's coming up on the 180 day on the 4 hour. You know, I wanted to go ahead and add another moving average into. I wanted to go ahead and add the 50, I believe. I was thinking about it because I want to see I want to add the 50. Let's just make this on the 50. I will never use a 10-day moving average. But I like the 180 and the 50. Yep. And I guess we can do it as an orange line. Yeah, sounds good. Or maybe pink, hot pink. That'd be cool. All right, there we go. So yeah, here's our 50 day. And that's the red one is the 100 day. So that's cool. But anyways, things up pre-market? No, not that I'm aware of. Let's go ahead and check in on some things. Start checking in on some things. Although, to be honest with you, I'm going to take a hard look. I'm going to take a hard look at my options and possibly be cutting some. And I don't think we're going to be able to take any profits. We just got caught in the dip, but that's what happens. You know, that's just what's going to happen. If we're not in a mini correction, then we would have been pretty profitable, but what you going to do? Can't predict the future, so that's just what's going to happen. But again, reiterating that it's important to not go very big in those options positions because things like this will happen. So overall, we can be profitable in the long term. But once a month, we're gonna get smashed. That's just how the options go. I mean, we're buying those common the shares of Print or ACIC or whatever we're buying, for example, and we can just hold those. Whatever. Look at the graph. It's still, we're technically still in the upwards bullish trend on the S&P 500, that is. I mean, we can still hold this stuff, but the options we can't. And that's a ticking, you know, we're up against the shot clock. So, I mean, it is what it is, but the 50-day moving average is actually really close to that yellow trend line that we were drawing to now that we're looking at it. But the good news is we're still in a super trend on the S&P. The NASDAQ, we are, but probably that's going to flip today. But it's okay because it might, as you can see on this last little dip, which was in the October one, it did flip the super trend, but only for like 1, 2, 3, 4, 5, like a week. and then it flipped back. So I mean, I will basically be considering like that. So today is going to be a day that, oh wait, no, it is in the bearish one. I didn't see that. Sorry guys. They flipped yesterday. That makes sense because that was right when it crossed our support. So I think that support is pretty accurate, but again, a monkey could draw this line. That doesn't take a genius. I closed several options yesterday, 10 to 20% loss, short-term call 60 days, and redeployed cap elsewhere. For sure. That is very smart. You got to do it sometimes, guys. When you're seeing the things like this happening, we don't know if today's the last of the bear sentiment, or if it's going to continue for a couple more days this week. You know, we don't know that. No matter what, nobody can predict the future. So sometimes you're going to have to do that. You're going to have to take a 10 to 20% loss right now, which I'm probably going to be doing today. That's what I was saying. We're going to take a hard look at those positions. And, you know, we might be cutting some. And it kind of sucks, but we will get back into these positions and make the 10 to 20% once things show signs of life. That's just how you play in the game for all of you new options investors. That's why options are inherently more risky. We're probably going to get killed on those Lee covered puts too, because we'll have a cost basis at around, off the top of my head, 28. I don't even want to look at it right now, to be honest with you. I'm happy with just following this hashtag right now, at least for another half an hour. But yeah, I love how calm and collected you are about this. It's gonna happen. I love it. You talking to me? Travel and entertainment and gambling are at pre-market, but all the long-term holds are down. Yeah, for sure. I mean, see, that's people are just, okay, look, you gotta understand something, but I mean, it's easy to understand. The stimulus just got confirmed. It more benefits those really hurt sectors like travel, airlines, tourism, gambling, or whatever, banks. So that's why a lot of banks are up. Even you know, sucky old Wells Fargo is up right now. The cheaters, the scammers, they don't deserve to be up. Well, they don't deserve to be up right now, but hey. You know, so the things that's gonna benefit is up. Now the weird thing is oil is up. But I mean, it's not super weird. Oil goes up. I'm not saying that it wouldn't go up, but at the same time, our good old renewables are down, and oil is up, which is the fossil fuels. So that's a little bit painful. But right now is the time to be, well, maybe not this second, but this correction cycle is the time to be going into the growth tech, because they're hit really hard. Semiconductors, which there's still a shortage. Just because these stocks are down doesn't mean there's not a shortage anymore. So tech, semiconductors, clean energy, like for example, ICLN or whatever, and also renewable energy, for example, Reggie, which we were doing actually. Those are going to be really good to get into right now. Next write up tomorrow, I'm gonna have to spell everything out like that, but those are the things to be going into right now. Besides your long-term positions, so consider it. You got into these long-term positions for a reason. Don't panic and get out of them right now. You should be focused on any cash that you have available, because usually you keep around 15% cash reserves. And if there is a correction, like right now, maybe every day you would add in about 2 to 3%, something like that. So 3% a day would be about 5 days you could keep adding it in. Or you could add it every 2 days. It doesn't matter. But that's specifically is up to you. but you add it into your longer term positions because first of all they're safe. Second of all, um, that's like the meat and bones of your portfolio, not these shorter term options. These are risky. We're gonna get absolutely smashed. And if you're putting more into whatever option we have right now, like no matter if it's Palantir calls or no matter if it's the Reggie calls, we don't know that the market's not going to continue down this week. And then those are just going to be so backwards that, like what are you going to do? You're going to hold it when it's 80% negative and you just added money to it? I mean, it's going to hurt. So I wouldn't necessarily recommend that. That is a lot more conservative. It's a lot more conservative way to do it. But that's what I'm about, If you're only messing around with a couple $100, like, just go ahead and get weeklies on even just tech or something like that, or Tesla or whatever. But if you're in this for the long term and really trying to create wealth and have a stable portfolio, I mean, that's the thing to do. I'm taking a big hit right now, but it's because of my 3X's. So if you're not comfortable with big hits, then don't get the 3X's. But they have just an enormous upside too, so but I'm not going to sell mine. I can't sell mine because I'll get hit with too many taxes right now. I need to wait a little bit longer because I was dollar cost averaging into those ETFs throughout 2020. It's not like the beginning of 2020 I just bought all because I started about 300,000. I can't just sell all of them right now. It wouldn't work. So I need to hold them probably in another 6 months, and then I'll probably be in the clear. I could rebalance, but right now is not the time to rebalance for me personally because it is I'll get hit with the income tax bracket instead of the capital gains, so I don't want to do it. Long-term capital gains, that is, but other than that, it is what it is. So I'd focus on the quote unquote important positions right now for your long term. And even if you're transitioning into for example, you can transition out of tech like with everybody else. I mean, but see, we would try to time the market. That might not be the smartest thing to do. Smarter would be buy the puts right now, try to make some back. Don't spend so much money though, because it'll bounce up eventually. It'll go back up. So don't freak out so much, but don't start selling. I'm personally not selling off because first of all, as soon as we sell, it'll go up. I'd prefer to lose a couple $1,000s on our puts that I just bought to try to hedge in case it gets worse. Then sold my, I don't know, let's just say my entire tech portfolio. Gonna get smashed with the taxes on it. And then I didn't time it well, and it already went up and just be totally backwards. So that's not the right thing to do. We're going to be looking at those hedges. I mean, that's literally about to be priority for me. I'm thinking about just market buying some because, but there's light at the end of the tunnel because I do believe that this speech, I think this is pricing in this speech right now. So we'll see. We will see. But I don't believe this is the beginning of a crash. Although if it is, it doesn't matter. It's okay, guys. Just hopefully you got some money ready to buy it because we're gonna buy them puts. And if it really is a crash like 2008, it's all good. We're gonna make a bunch of money. You don't just make money when it's going in one direction. You can make money both directions. You can even make money flat with some condors. Well, let's check out. Would SQQQ calls be valid? Yeah, for sure. Of course it's valid. There's a lot of different ways that we could do this. It just depends. How much do they cost? I don't want to spend so much money. I would prefer to get the cheapest ones. But it doesn't matter. You can do those things. And you don't have to do 332 days. I'm always looking at those just because we can get them for really cheap and we can just hold them for 332 days. So we kind of have like some sort of insurance policy against the crash for 332 days. That's my thought process. Oof, that's puts. Yeah, calls way out of the money. Yeah, still, the furthest we could get is still $250. So what are you going to do? You're going to buy a few of them? Yeah, I guess so. And then if this shoots up to, I don't know, I mean, if it really was bad, it would go up to $30, I guess. Real quick, I'm sure. Maybe more, probably a lot more. But yeah, the IV is already pretty high. It's already 150, so now high IV means these are historically a little bit expensive. But if you go back to like the Dow example, which is not a good example for right now because this is not a crash, this is a transition between the NASDAQ, S&P, and into Dow. That's the very simple way to look at it. I may add a leap on Reggie while it's so cheap. Yep. SPE, MU, Palantir, Apple, to name a few. I just lost the context. What calls you got, yo? Those are all good ones. Just the thing is, nothing is good when this is going on well. At least in tech, but I'm personally not gonna let a little correction like this affect. Just move all out of tech. That's crazy. Tech is still the future. Sometimes need to be a bit patient. Is the SQQQ? Is the -3? Oh yeah, it's the -3x. This would be pretty good for me, but again, it's a little bit expensive. But we could go shorter time. We could buy insurance for 1 month, 25 out. So that one's a lot cheaper. Can be interesting, but keep in mind we might lose that. But then again, maybe not because these are up. I mean, as of yesterday, they went up 30-60%. But that's not really going to help so much because what's 30-60%? You planning on putting $10,000-$20,000 into it? And then it can be interesting, but to hedge mine wouldn't even help because I'm down a lot more than that, so I'd have to spend a decent amount of money on it. I don't really want to do something so short term and spend a decent amount of money, so I would look for something around a year plus, so I can just hold them for a long time, and in case it crashes, and then I'll be like not sweating anything, but like, oh, it's dipping today, cool. Let me just take some profit on some of these insurance puts or whatever you want to call it. But anyways, it's about time to face that music, which it's gonna be. Just one word I can think to describe it is just suck. But it is what it is. So let's go ahead and check out this speech thing going on. I'm just gonna head over to Market Watch really quick. I don't really like Market Watch. A tangled market web of Tesla Bitcoin ARK investment could spell trouble for investors, warn strategists. See, that's the interesting thing. That's the big headline, the front page of Market Watch. That's interesting because I was thinking about that. It's like, okay, but if you think about it, ARK owns Tesla. Tesla owns Bitcoin. So, first of all, it's no wonder the Tesla stock is crashing. Starting to question if that was the best move, Elon. I mean, I guess so, because he already made a lot of money anyways. I know you're not using margin, but people who are, is a good idea to think of deleveraging. Yeah, for sure. But it depends on how you think about it, though. And by the way, I am using margin, but not much, just a little bit. And I have cash reserves to back it. But I don't know. Depends on how you think about it, because you can buy on the way down. Because think about it. You got your margin on and just ready, because if it crashes, you know, how long does it take to transfer money into these accounts? And maybe you want to buy like we were talking about, maybe you want to do 2-3% per day on the red days during one of these corrections, and these corrections could last 5 days, but it also could take 3 to 5 days for your transfer to come in. And Weeble's only giving you like $1,000 in immediately available purchasing power or whatever they call it. So I mean, I'm not. I mean, the what you're saying is absolutely true. You deleverage during a crash for sure. Out of your more risky positions, at least sell them off to cut down on the leverage. But you can. I'm not opposed to using margin to average down. So Elon more volatile than GameStop. I know. Sometimes you feel like that, huh? Any thoughts on hedging in this market environment? Things look unstable. Yeah, I mean, we're pretty much. You must have just joined in, so welcome, Jasper. Appreciate you guys coming. Check out those links in the description and give this a big old thumbs up like, because I'm gonna need it. I'm about to have to face the music, but overall, this doesn't bother me too much because if I didn't have to do this live stream right now, I'd just be chilling. I probably wouldn't even be looking at it too much. But, you know, because this just long-term hold, you kind of just gotta sit back and hold. I mean, there's not all much you can do, but for sure, open up the computer once a day and dollar cost average into it, but that's pretty much it. But, you know, we're gonna stream it. We're gonna stream it. We're gonna take a look at the hedges. Yes, buy cheap puts year and a half out on whatever sector, just in general, just the general puts. I'm not going to go through every single position I have and buy puts on it. I'm not going to do that. Although you can, and it's relatively easy. I mean, if you got 100 of QQQ, you just go buy one put for 100. I mean, that's basically a pretty good start. It ain't very hard to get some sort of hedge going. Of course, you can be all exact and pull out your calculator and do some calculus and, and try to get like the absolute perfect hedge where you're just going to be totally flat until you sell the hedge. But, you know. Appreciate that, Ed. Selling my first covered call on Solo, and man, that stock is falling. Yep. EV is, though, not just Solo. Solo's falling. Tesla is down a lot, man. It was over 800. Who was it? It was 875, wasn't it? Like 675 now. I appreciate that. He's far. Appreciate it. Hope to catch you. Hope to catch you next time. Down 20% on Solo. Got in at 760 for sure. I mean, pretty much that's the story across EVs right now. I guess we could always look into Workhorse, but man, like I said, I don't want to get into any other positions right now. Just not worth it. We already have a lot of positions. I don't want to get into anymore. Raz, what's up? Yeah, I didn't, but I have those orders. You can see those on my screen right now. The limit orders, they're still GTC. But yeah, here they are, and that's on the Dow, which is not going to work anyways. So to be fair, kind of want to just cancel that. Because the Dow's not even going down. The O I want. The O is also a good hedge because it's real estate. I have used REITs as hedges before in some of those previous dips last year. Nothing wrong with that. Because as you can see, O is down 1%, but that's not that bad. And it was actually up 1.6 yesterday. So I like real estate, like banks and stuff like that. Edward, I have 132 shares at around 784. I'm nervous to keep dollar cost averaging. Yeah, of the Solo. Yeah. I mean, that's exactly how I feel about Tesla. Like, I'm not really trying to buy more than 100 shares because I just wanted 100 so I can sell the covered calls. And now I'm selling the covered calls. I'm making money. I'm lowering my cost basis. I mean, you sell Tesla covered calls, you can make a little salary on the side. Shoot, every month you could make a couple $1,000, like three to $6,000 a month selling Tesla covered calls. So that was the idea, but just got caught in this, caught right in the middle of this. So I'm not worried about it. No more negativity from me today. Let's look to the future, and like Zach said, we can make money on the way down as well. Yeah, for sure. It don't matter, guys, if it's going down. It really don't. It just, hopefully you guys have some cash right now that you can buy some of these puts, which we are absolutely going to do. I'm even thinking about just market buying them, because probably there's going to be other people buying them today. Well, we'll see how bad it goes down, and probably as soon as we buy them, probably speech is going to be over and go back up. But it's a good thing we got out of that iPod position, because it's down 7%. I'm looking. DraftKings is down 4.5. Sell a covered call and average down. That's what's up. That's pretty much what I'm doing. My Tesla. I'm doing it with solo too. I got some of those too. I got 100 of them. Not that much, but I got one. Arcs are still down 5. It's a decent amount. Soxel's down 5.5. Okay, that's good news for me. TQQ down 5. Echo down 5. Okay, so tech semiconductors are down a little bit more than 5. I expected worse, to be honest with you, so I'm not so upset about that. Even my Dow Jones is down right now, guys. It's down 0.45. That's interesting. So look at DIA. This is the Dow Jones ETF. This is what I would be interested in buying the puts on for the hedge. Not down that much though, 1.12. Let's go down 15-minute, see what the movement is. Don't know which way to go. I expect it's getting priced in for the speech, starting to get priced in. And then I don't really know which way to go, kind of just waiting for the speech. I assume it's something like that, but I don't want to assume anything. But anyways, Dow is going down, but it's not really, it's flat, not really going down. Nevertheless, go back out to the day, look at the options. We got about 10 minutes. How much are these going for now? Go to the puts, 95, 37, so it's up. Oh, it's up. There was people in this stream on Friday buying them for 15 cents. If you right click and do view quote, we can see that there is 37 getting ready to sell at 37 cents, about $37. So we could just buy them all up. That's what I'm saying. Just market buy them all. But you know, I want to do this, but for the Dow Jones, it's not even going down, so I wouldn't even say that. But I'm thinking about doing something like that, seeing how many is available at the last price and just buying them all. Don't buy more than that, because if you do just a market order for like 50, for example, you could get the 37 available at 37 cents. But I don't know what the rest, what is it, 13 are. It could be like $1 million, and they just bought them for $1 million. You know what I mean? It could be just something crazy, but and I don't have the level 2 on those. Can't really see that, but it's okay. I don't need to see it, because 37 is dollars each. Still, it's going to cost $1,300, and it's not like I want to do more than that anyways, on the Dow at least. I need to be more positive about my positions and looking to the future, because I can make money on the way down as well. Yes. Yep. 33 to 37 for sure. Yeah, they go up, but the Dow was kind of flat. So it's interesting, but it's just they're going up because Maybe it's from our stream, or maybe people just thinking about start buying some puts. Why DIA and not SPY, for instance? Yes, a good question. Let's look at it. How much time we have? Oh, we still got 9 minutes. Because it's cheaper. That was $37, and it's for almost a year. It's for 333 days. So if we go the puts at 32 days now, sorry. And the puts, the cheapest put that we can get is $65. I would like to view quote. There's none. Where's my internet that's slow? But anyways, you get the point. So it's almost double the price. You can do whatever you want. I'm just giving you one example of the Dow. But for sure, I'm not interested in doing the Dow today because it's not even the one that's going down, so that's not going to work because this is not a market crash. If this was a market crash, Dow would be going down as well. In 2008, the Dow lost half of its value. It literally went down by 50%. So this is not a market crash. This is a transition from tech into boomers. No, it's going from NASDAQ into Dow. That's why right now. 37 isn't going to cover your entire account though. 37 would roughly cover your account. I mean, I'm not really looking to cover all of my account with one, but you'd buy as much as you can. But you're not going to buy them all at, as soon as the first minute of the market open, you would think about it and you would get some of the Dow. You could and get some SPY. You could get some triple Q. You can even get some ARC like we were talking about before. Right, Mr. Snooze. That was my point. We just used the Dow for example because it was number one, it was cheaper, and if there is a true market crash, the Dow's going down. It's not like the Dow's not gonna go down like what's happened right now. Because right now it's not a market crash. So no, I'm not gonna do oil. No. There's other things that I would like to be thinking about right now, to be honest with you. No offense. What tech stocks are you keeping an eye on in this dip? Clean energy, renewable energy, and ARC ETFs. I'm focusing on the bigger ones, the bigger picture here, the long term. So leaps, I'm not doing anything short term because you're gonna get smashed if it continues dropping for the next couple of days. And you get into some of the shorter terms now, you will get smashed, or you might make a lot of money. The risk is up to you, but I'm not gonna do that. I'm taking it easy, managing the positions I already have, possibly closing out some for 10 to 20% loss, waiting for it to bounce back a little bit and then get back into them and make the 10 to 20 back. That's just the name of the game. Options it's not for the light of heart, but leaps, covered calls, those are the safer things to be doing. So manage your positions right now. If you can take any profit, take it. For options, not necessarily long terms. If you have long terms that are down, use those raise the capital, try to take profits, try to cut for 10 to 20% losses in the shorter term ones because they're not going to do well. You're against the shot clock. Raise the capital, put them into the longer term positions. So let's say the DIA makes some money. Do you hold for the crash or what's the move? I might sell. So like specifically this correction, yeah, I might sell half. I might sell 3/4. Take the profit. But the point would be for the bigger crash. The point would be for the bigger crash. But I might, you can take some now and you can buy some later. It doesn't matter. But the first step, we need to get some. But again, the DIA might not be the best one to do it at because this is not a crash. This is a move from NASDAQ into Dow. And somebody look up this speech, what's going on with it, please. If anybody is not trading. If anybody's not trading in the next 5 minutes when it opens, please check out the speech. I'm trying to look at it. Yellen attacking Bitcoin. nothing good on Market Watch. I was just looking over Market Watch literally. Why do I even go there? There's nothing that I just learned. Okay. So, anyways, I'm starting to question the Tesla thing though, because I could have, if I wanted exposure to Bitcoin, could have just bought it. I didn't necessarily want my Tesla to be affected by Bitcoin, which I'm not saying that that's the only reason it's going down right now. The markets are obviously pulling back and Tesla is cooling off a little bit from some insane gains. But you know, it is kind of a good point. Would a 332 on ICLN be a good investment, or are we trying to get in over the year mark for tax reasons? Yep, year mark for tax reasons. If you want to be tax conscious, don't make every decision based on the taxes, but obviously think about it a little bit. So if you can get $1,000 for 332 days out, which is less than 12 months, so you need to pay your income tax level. But if you sell it more than 12 months, you pay 15% capital gains. So that's a lot less, maybe half. So pay a little bit, pay $1,000 for the shorter, the 10-month one, but you can pay $1,200 for the 14-month one. Get the 14-month one. There's a transition out of tech right now, Zach Lang. People are selling their tech things and moving into more traditional things, like tourism, the gambling, the travel, the things that are going to, and like banking and stuff, the things that are going to benefit from the stimulus that was just confirmed. Tech is not going to benefit from this stimulus. So right now, there was some sort of transition. And really, that's NASDAQ is heavy tech and Dow is heavy those other things. So, yeah, that's pretty much it. Yeah, 40% on the net, 25 on the Peller. I know. We need to look at that. I'm not opposed to taking a loss, though. I'm really not. Because we can always make it back later. It can be the responsible thing to do here. Even though it hurts sometimes to actually click the buttons, but could be the responsible things. If these positions aren't that much money, like just a couple $100, we could just let them ride and not worry about it too much. But especially, I mean, if it's down 70%, there's no point. It can open down a lot. Just depends on how much the underlying goes down. Anyways, guys, there's a minute left, so wish everybody good luck. I'm gonna be looking at the options first, seeing if we can close anything. If anybody can check out that speech, I would appreciate it. And then the next thing I'll immediately go into the put. Well, I guess the first thing is to see what direction everything's going in. Well, anyways, moment of truth. Down 4 3/4. See, this arc one is actually up 1 1/3. I should have closed that yesterday, but let's see if we can get it closed out for a little profit. I doubt it because Tesla's in that one. The arc G is leaps. I'm not interested in closing leaps, although the more shorter term ones I am. The speech is in half an hour. Okay. I thought it was at 2:30 EST. Okay. Okay, we should be open. Yep. All right, we're off to the races. Yeah. Voxel's down 6.7%. All right, yeah, the ARC thing, yeah, it just dropped. That's the leap though. Yeah, it's January 2023. I'm not interested in closing it anymore. The ARC G is this December though. But it's still a while. I'm not really interested in closing that one. The ARC W also I'm not really interested. It's also December. Again, that's also down 23%. I got some ARC W commons, ARC F. It is for January 2023. Not really interested in closing that. My space one is up right now. Let's go ahead and check that one out. But that was the selling of the put. So now really the question is, do I want to get assigned? You know what I mean? And risk going down even more? That's really going to be the question here. But yeah, I'm pretty sure I'm just going to go ahead and buy that back for... Or a little bit slow. Oh my. Apple, those are not quite leaps, but we still have plenty of time. So I would be more interested in dollar cost averaging the ARCs and then the Apple right now, but yeah. But yeah, I'm gonna just go ahead and close any profits we can get though, if possible. Well, we're at least gonna try to close that one. I don't know if the limit order is gonna hit or whatever, but we'll see. Yeah, I don't know why it didn't update. Oh, that was a little bit slow. It just switched over because I was wondering like, why am I still up on this? But yeah, I still want to close that. I don't really want to take a risk it would fall more. I mean, I don't know. How long do I have? I have it until March. Yeah, I think I might hold it. Ugh, such a hard decision, to be honest with you. What else could I close though? The ACTC covered. I mean, no, I don't really want to close that. The solo, not really any point. Palantir, we are down a decent amount. And then the net, like you guys were saying. The Reggie, we're selling a put. We are definitely gonna get assigned on that one, I think. Let's see. But that's okay because it's the renewable energy and we'll just have 100 shares, which is not all that risky. But yeah, we're definitely gonna get assigned on that one. That one is down a decent amount. So let's see here. Palantir. Net, Reggie. I mean, eliminate vertical. Could close it out. The Tesla cover call. The cover one I'm not gonna close out. Although I guess I could and try to sell it again and get more money. The Lee, we're gonna have to just buy those shares to get assigned. DraftKings, it's going down right now. We could take a loss on that. Close it out, although hard decisions. The LAC, see that's the thing. That one we're gonna go ahead and close the LAC because that one it's kind of tied to the electric vehicle price. So we're gonna try to close it at just the market price it is right now. We're gonna close them all. Just try to raise some capital back. Take some small losses here and there. So hopefully those fill. But yeah, if we can raise capital here and there. Okay, the DraftKings is back up to -10. So let's see what's going on with DraftKings. Not on anything good. Guess it is coming up a little bit, huh? Interesting. Go down to the 4-hour real quick. Yeah, it's definitely getting worse. Everything's down. Even Dow is down now. All right, well, let's look into those puts then. Just do that. Well, let's finish up the option things. Pretty much that's it though. The GVO we're holding now is pretty down. Nano dimensions, I guess we can average down, but I'm not going to focus on those right now. The only thing that I could be interested in would be the print calls, because that's August 21st. We still have some time, but down 26%. So I think, yeah, I'm just going to go ahead and close that out. I just want to raise some capital and use it for other things right now. Okay, those. Oh, that was Palantir? Oh, yeah, that's right. That was print, my bad. All right, that's fine. And let's see what else. The LAC I would like to close out. Let's try to modify it and get it closed. Okay, that finally closed. 295, it closed it. The space, I would also like to modify it. Down a decent amount. Dow was dropping, yep. Yeah. You definitely feel free to keep them. I just want to raise capital and put it into something else. It's not that I just lost faith in these or anything like that, but I mean, I'm gonna get assigned a decent amount now. I'm gonna get assigned 400 shares of Lee, which I'm gonna be taking a loss at. I already got assigned the what's it called? The 400 of Givo, and I've got the Nano Dimensions, which I'm taking a loss on all those common stocks. So I mean, it's a decent amount of money in these ones. It's okay. It's okay because I wanted to buy those shares anyways, but the market's correcting right now, so you know, it is what it is. The lemonade is down a decent amount of money, but luckily we only had one of those. DraftKings could be better. I'm not so interested in holding this out, but I'm gonna try to close that at 515. Put the money into ARK or something like that. So let's see. But yeah, let me know, guys, if you're closing yours out too. Okay, that closed at 534, so it's not bad. Yeah, it's just a small loss here and there. I mean, it's for me, it's a couple $100 here and there. But I just want to put these into the puts, put them into other things. And let's see what else. I mean, the space. I want to go ahead and close the space. I don't want to get assigned more shares that are backwards. This loss is only going to be. This loss is only going to be $200 something. So I would prefer to take a loss of $200 now than get assigned 200 shares backwards. So I think that's the right thing to do. Once everything shows life, I'm going to buy the space because it's in my buy zone. I just want to make sure it go down more. So it's almost, in a sense, we're kind of rolling these out, you could say. But for sure, we're taking the losses, moving this money into other things, make sure the market doesn't just start bleeding a lot more. You know what I mean? The space thing. Wait a minute. I need to double check this is all right. Okay, let me check the space one more time. So space, the selling for 683. Buy it back for that. Okay, that should get it. I'm buying to close. Yeah, it filled. Sure, 713 it filled. Okay, so that was like a $300 loss, but I'd prefer to take that loss than be backwards on 200 shares of space, to be honest with you, because I can always buy the space back and it doesn't. So a lot of those plays didn't work out, but that's just what happens in options, guys, when the market is correcting. The longer term things I'm not so worried about. So that seems pretty good. Yeah. Couldn't pick up the net. I think it's not a bad idea. Net overall is good, but I'm gonna wait. My Reggie is down, but that's selling, so I'm definitely gonna get assigned the Reggie. But that's okay. I kind of wanted that. It's the renewable energy play. You even could double down on some Reggie or ICLN or something like that. But I'm gonna go ahead, take a drink of water, and check out this possible hedge. Just do a tech sector one. Options, puts, 332 out. These are extremely cheap. Let's view quote. Well, they're up now. 63 cents they're asking. I don't really want to market it. It's definitely expensive. But that just goes to show you that. Oh, okay. I just got some filled. 100 at 46. Okay, cool. So those actually got filled. So my hedges are starting to get filled. I'm just doing a tech sector hedge at what was it? Yeah, I agree with that. Close the Palantir at -25 instead of -75 for sure. That's the print. So in theory, we're kind of rolling it out. We're just making sure it doesn't keep going down because the options are really just races against the clock. So that's the only concern I have with that. But so yeah, okay, we have this hedge now. Let's go ahead and look at it. Where are you? Okay, here it is right here. It's a put. I got 100 of them. I got it for 47. The last price is 35. That's okay though. That's gonna change. Those are long term. I kind of would like to buy some more. God, that is just so slow. It says it's 5. We want to buy the put. Can we get them for 35? I don't know. Well, anyways, we got the order in. So, yep, this XLK one is in. Let's see, what else could we look at? We could look at DIA. Those should be relatively cheap. Let's see what the price is now. I would like to sink some more money into O, but I think the margin fee is like 5% on Webull, 5.5 or something, and then the O dividends is only 4.5, so kind of gonna be losing on that. Unless of course it goes up, but yeah, these are 37. Well, it's gone up to 42 now. Somebody's making money. But yeah, the XLK one could be interesting because that's just tech sector overall. I could do maybe. We could try 37. We could. Don't need that much because I'm not so heavy in the Dow, but we're gonna go ahead and do that. I think these are the right decisions. So I'm raised the capital out of some of those backwards options positions, and I'm just moving it into these hedges temporarily, or maybe long term. We'll see. Um, Net is -50. Not sure if it's worth closing this one. I know. Well, if you guys. The question is, how long do we have on that? God, my portfolio is down so much. That's a decent loss. I don't know. I mean, it's hard to say, but depends. Yeah. Could keep them. It is May. I mean, we got a couple of months. It's not all that long. Also, it's not that big of a loss. Or I only have one of these, so it's not so bad. I think I might see if we can get it out and see if it drops further, because things are definitely going down right now. This is a pretty big red day. Not for the faint of heart. Faint at heart. Okay, and then I want to look at SQQQ. And let's see what's going on with the snooze. It's only a loss when it's realized. Yeah, I know. Gotta keep telling yourself that. Just look over the news really quickly. Nothing really interesting. But yeah, anyways, the S triple Q could be interesting. Go over to calls on this. Yeah, it's already gone up though, so I don't even know if it's worth it. Could be, but I prefer. Yeah, mine is I'm pretty loaded up on tech as well. This is a pretty big down day though. So it's definitely time to load up on some hedges in my opinion. So yeah. And then just raise some capital. I mean, like just here and there, like I could close this lemonade, I could cut the loss at 55%, which sounds about right, and then get 450 out of it and put it in hedges that might go up if the market keeps going up. But of course, you got to understand that it also might not go up. But it's longer term hedges. I think it's pretty safe. So just you can get $450 out of it. I would switch it over to a hedge. I think that would be the right decision. It's always hard to say because as soon as we do something, the market's just going to do the opposite. Yeah. See, how is Lee doing? If we can get out of this day with like a oof, Lee is down a lot. Whoa. Yeah, so what does that mean about Tesla? 12%? Oof. It's interesting. Well, I mean, what is up? Okay, my eliminate field, just went ahead and cut that. So basically, I have this hedge, which has gone up. The market value is 4,500, so I mean, it's not going to be enough for me. I wonder if we could look at like an SOXX. Which one is cheaper? Is it SOXX or is it shaking my head? Shaking my head. So let's get some puts way out. Those are pretty cheap. Not right now though, but could be. Quote here. There's only one for 4. So there's a little semiconductor hedge going on, and these are all long term. So okay, that filled at 39. So yeah, picking those up for $39. That's actually pretty cheap if you have semiconductors, guys. We're gonna have to change some numbers on the watch list. That's funny. You have a nice sense of humor. Well, anyways, I'm picking up some hedges. I've got my semiconductor hedge. It's not enough, but I don't want to market order too many things right now. The semiconductor hedge, the technology sector hedge, the Dow we're still looking at. But this is not so bad. So far, I mean, doing some pretty good things here. The market is coming back up a little bit, but don't get all excited though. We cut some positions that would be sour. I mean, because if we waste another week of it being in the red, even if it's flat, that means we're losing an option. So best case scenario at this point is we end up flat this week, but we've lost it 7 days and we have all that decay. Just the game you got to play, you know. My Reggie is down, but I think it's going up. The net is down 50. I mean, the net is a good play, and we have until May, which is not that much time. So what are my orders that are working? I am working to sell this 455. Current is 430. I'm gonna modify down to 430 and try to get that filled. Okay, it actually filled at 455, which that's weird. That's what I just had it at. Okay, okay. And okay. Let's see. So that's filled. So we've got ARCs. I'm not selling the ARCs. Insert Wolf of Wall Street meme. I'm definitely not going to sell the ARCs. Although, no, things are going up. People are starting to buy right now, but could be a bear trap, so be careful. Let's see what else. The Lee is gonna get screwed on that one. Gonna get screwed. I mean, gonna get screwed. We're gonna have to get a sign, and we're just gonna have to hold it. Overall, the next EV push is gonna help us out. The Apple, it's not as bad as I would have expected. These are the puts right here. SMH and the XLK put. Those are the hedges I've got. So I'm already up on the XLK, so that's nice. The SMH is going to need some time because I just got it. But so that's not enough. I already spent $5,300 on the hedges. I'm waiting for the Dow one to fill, although why? You know, is the Dow even, what is it even doing? It's not falling because this is transition. I don't think this is a crash. But if we can get out of this day down 5%, I would call that a win. And switch some of the sour option positions into hedges. Long-term hedges, that is, so we don't waste our money completely. These are the insurance policies for a year. So my puts for value. Yeah, it's at 42 cents, 43 cents. And mine is at 37 was my limit. I mean, I would like to get it for 37, so let's just hold on. I don't really need that one anyways, but I'm interested in these puts for long term. I'm okay to drop $10,000 on it too, and 10,000 would be pretty good if there was a really big crash. But I mean, we'll see. I don't want to go into the S triple Q because although those are not yeah, those are expensive. $300 just for one. I'm not really interested. Dow put spike to 70. Yeah. I wonder if that's because of the stuff we're doing, because that's just like a random one. There's so many different ways you can hedge. I mean, just like a random put that's like getting some decent volume. But whatever. I like the XLK one because the XLK one is cheap. Relatively cheap. I mean, the market is just tanked today, so obviously not going to be that cheap. If you bought it on a day that the market's, sky high, then yeah, it would be cheap, but right now it's not. But we can dollar cost average into some more of those later. I don't want to do anything crazy. Again, don't want to do anything crazy. Palantir starting to pick up again. I know. Most everything is. I mean, I just went up 3% from what I was, so that makes me feel pretty good. But the options, a lot of these are pretty backwards for the selling of the puts. But it is what it is. I mean, if we had because at the time we were doing that, if we had just bought the 100 shares, it would be even worse because we didn't even get anything for it. We didn't even lower our cost basis. So overall, that would have been the best thing that could have happened for the amount of foresight that we were having at that point. You know what I mean? The Tesla, I'm up a decent amount. I could close that out and then redo it, but I don't know if there was any point in that. It's down 9% today, which is horrible. But I mean, I could consider going out at try to get paid on these, Go out 3 days and then call. I could sell a call at 660, 670, and I could get $2,000. I mean, that sounds pretty good right about now. Or even 10 days, I could get 3,300. I would have to sell them, but at this point, there's just so much exposure to Bitcoin and Tesla. I'm really questioning it, which something I didn't think about before, but well, I don't know. I really don't know. You worry about liquidity with these puts? Yes, a little bit. So just spread them out. Don't get all of one. But I just pretty much market bought, I don't know, like $5,300 worth of them. So there, and I got a pretty good deal in my opinion. So I'm not so worried. But I mean, for sure, if you're trying to get a couple thousand, then I would be a little bit worried about it. But anyway, so I mean, these puts are obviously down. But again, if I have to sell the Tesla, I'm not going to be so upset. I think. Just because I can always buy them back. That would raise a decent amount of capital. Overall, I'm still up. My cost basis is only what? Maybe because I have the call on Tesla. Yeah, my average price is 526, and keep in mind I just bought like 30, 45. Literally just bought 45 shares at like $800 or something. So not so bad considering that. But yeah, things look like they're moving up, and I mean, yep, overall, let's see the ETFs. Barkline, yep, things have bounced up. Take it with a grain of salt right now. It's too early. I need to organize, put some SPACs in here. How's the crypto doing? 50, 1630. I mean, that sucks too. But what about 3M? How's that? Yeah, it's not so bad. This one has decent dividends. These are the type of things I'm sure a lot of money is rotating into, I would assume. So, I mean, what's the dividend? I think it's like 3.5% on this one. There's nothing spectacular, and I would prefer O. So, yeah, whatever. But just looking at my O, taking a little bit of a dip, which is good. I actually want to buy it. Because these dips, there's not much, there's just basically no volatility. If we look at the day chart, oh, this is a really safe play. That's a perfect to do some sort of condor on, actually. Which we were doing, but it didn't get filled, so haven't done it yet. Haven't done it again, but still. Um, there's not much movement on it, and it's making 4.5%, and you get paid the dividends every month. So I mean, this can totally supplement your income. Obviously, 4.5%. Definitely gonna need some money to make it worthwhile. I mean, I'm literally, I think I got 20,000 in O, and I'm making like $1,000 a year, so not much. But think about it as a rental property or something like that. So try to just put some in there every now and again. Wait for your retirement. The goal would be for 20, 30 years from now, it's paying 6, 7% dividends, which that's pretty interesting for retirement. For retirement, little retirement salary. But as you can see, there is growth in O. It's just as of late, it's been pretty low. But yeah, it could be time to buy art. I'm down more than 8%. So yep, let's check it out. Time to get a discount. Yeah, time to get a discount. I mean, I'm down like $100,000 this week, or including last week, I think, something like that. But the other dip, I remember I was also down like that was the January 26th dip. So it's if we can hold right here, I'll be pretty happy. But we'll see. Yeah, I know the arcs are so cheap. Look at it. Six. That is definitely cheap. Yeah, I think we would go ahead and pick up one more of those. We got our hedges. We're going to dollar cost average the cheaper position, or sorry, the more important longer term positions. Those are the right things that we can be doing right now. We could also pick up some more prints, down 7%. Let's go ahead and think about that. Yeah, it is going through my buy zone. So we had 50 at 43. I mean, let's just go ahead and put another 25 in. I mean, I don't need to get crazy. Try to do it in for 40 would be cool. Time and force day, yeah, extended hours, yes. Let's try to get some more print. I would like that, to be honest with you. And also nano dimensions is kind of, it's also a 3D printing play. But the print is over, how do you say? They're not managed by ARC, but they're, wait, hold on, I'll think about that. Um, yeah, advisor. They're advised by ARC. So that one's always pretty good. I usually like to get some of that. Clean energy, I'm not ready to pull the trigger yet. But the ARC, WKQGF, which one is down the most? A, probably because. Also THCX, we could probably get a leap on that. I already bought some nano dimensions yesterday, so I might get a few more commons, but not anything crazy. Not on a day like today. Like I said, I'm trying to raise capital, get out of some backwards options positions because the decay is just really gonna screw us up. Especially if we're down for a week and flat for a week, it's gonna screw us up. But man, those are moving fast, guys. It was 5.5, now it's 6.5 already. Cool. Overall, things are on the up and up a little bit. Let's see. Cool. One of my friends. I don't know if you're watching this, but congratulations on the 100 shares of Tesla. It is a good time to buy that. All right. And you have diamond balls, as they say. All right, all right, all right. How are my hedges doing? They're doing all right. I'm up a little bit on one of them. Nothing spectacular because we are going up a little bit. But yeah, we're gonna wait around. The ARK K I don't really want to buy, to be honest with you, because I have so much Tesla. But what's the next one that's down the most beside ARK K? Seems like it would be about ARK W, so that would be cool. Especially we just closed the Palantir, so we can get exposure through this. So let's go ahead and. But this is really unfortunate because it's a 297, but it is what it is. This one's gonna be cheap though today, I bet you. Because what the ARK W we bought this one for 41. Nice. Okay. Yeah. Wow. It's definitely time to buy this. So we can dollar cost average down, lower our cost basis a decent amount. So I'm even tempted to get more than one, but I'm not gonna do that. We're not in any rush. These are not cheap, but these are long-term positions, and we're gonna go ahead and put a limit order in at probably. I'm happy with 27. I want it, but I do kind of want it. Let's move it up to 28. Should get filled. And okay, that one's gonna be off and away. Get some let's get this over on Twitter. ARK W, dollar cost averaging. And okay, what's the next ARK we can DCA on? ARK W, so don't want to do ARK K. The Q would be the robotic one. I have common stock of that. I don't think I really want to do a Q leap, but I would be interested in the ARK G possibly going down on. ARK K I'm not, to be honest with you. And it's not even down that much. I should have sold it yesterday, but hindsight's always 2020. So the ARK W, we're trying to get into that one. And then the other one would be ARK F. Probably ARK F. So let's go ahead and create a new order for this. Let's try to set this at 16. Let's try to do 1650 on that. That would be great. We could get the cost basis down to almost 1825 maybe. Yeah, let's do it. Things are going up, so I feel pretty good about these things right now. So pretty much that was the strategy, guys. Cut out the sour ones, the sour shorter terms, move into hedges, but not so much money into hedges because we want to slowly get into those. Because those will also have decay. And then go into your meat and bone positions, your longer term ones. See, this is ARK F, dollar cost averaging in this. And I'm just making this really short now on Twitter. I guess I've gotten lazy. Just instead of putting the strikes and the dates and stuff. All right. Well, hello to the 88 brave people that are looking at their portfolios, or maybe you just want to look at mine. Because mine is not doing all that good, but I'm pretty happy with the direction it's moving in, although it's too early to really say. But as you can see on the spark line here on Webull, it has bounced up a lot. Some are pulling back a little bit right now, though. So we'll continue to watch that. The last one that I would want to get in an order for and hope it fills would be the G. I have 100 shares of ARK G. I could sell, and also the ARK K. Huh, forgot about that. Interesting. With 400 of GEVO, I should sell the cover calls. Good. All right, well, let's go ahead and do the ARK G really quick. So this one is going to be Yeah, create new order. Do an 18 limit for ARC-G. We're gonna go ahead and put that in. ARC-G, dollar cost average. Okay, so I'm at least got orders in for all of my ARCs to dollar cost average. We'll see if it hits. Why am I avoiding ARC-K? Because it has a lot of Tesla and I have 100 shares of Tesla already. I don't want more exposure, which is basically exposing myself to Bitcoin, which I don't really like, to be honest with you. I mean, I like Bitcoin. I just don't like, I don't want to buy Bitcoin if I want to invest in it. I don't really want to buy Tesla and be exposed to Bitcoin. So, oof. Stock market is trending on Twitter. That's funny. Okay. Down 6.9. I mean, things did just pull back a little bit. But eventually, guys, there comes a point where people are like, wow, Palantir is pretty cheap. Maybe I should buy it. Or, oh, maybe we should buy some more Tesla. It is pretty cheap right now. I got 100 shares, although I got them a little too early. Should have waited for a bigger dip. But speaking of those things, I wanted to sell the covered call. So let's go ahead and see if we can check out ARC-G covered calls. Just try to lower the cost basis a little bit. Since we have 100 shares of this, we can do it. So the calls go out 24 days. 24 days. I mean, at this point, I have so many leaps. I don't care if I get assigned so much. $100 is not very far away. And I assume it would bounce back up there because it's $100 is really not very far away. Yeah, but again, I don't really care if I get assigned so much. This one's going for 440. I could get assigned on it and just be like, whatever. Limit price $4. That's $400. And then I sell for 100. What was my cost basis though? No, I'm actually down on that. So no, that's probably not a good. I'm down just a little bit though. My cost basis is 101, so I need to be careful of that. Well, I mean, it would break even though if it went up to 100. So I could kind of break even on that. And I have all of these leaps now, so I'm not all like super want to keep these. I mean, it's $5,600 in ARC-G leaps. I'm trying to get another one. Then 96 in the 100 shares, and I just get so much more cheaper exposure with the. Well, these are technically not even leaps. These are December 21st ones. But yeah, I could try to break even on that. That's not that bad, and then I wouldn't pay any taxes anyways. But it could be interesting. Anyways, the ARC-K ones I got a longer time ago. And then the, what else do I have? These ARC-Ws I also, yeah, that's right, I just picked those up not too long ago. I could sell these ARC-Ws because I'm not really going to do much with it since I'm getting all these leaps, or at least I'm trying to. So this could be interesting to sell off actually. Just focus on leaps on the ARC-Ws. You know what I mean? These are my two hedges. Just gonna chill with that for now. Okay, I don't know. Hard to say, but anyways, let's look at Jivo. Down 10%. That really does suck. And my cost basis was $13, so now a decent amount on that, but it's okay. It's coming back up. right at my cut line too. And I'm not going to cut it, but I'm going to try to lower my cost basis here. See if we can make some sort of IV play here, which not looking like we're going to. 24 days. I could, if it goes to 12.5, I think this could be interesting. We're going to go ahead and do that because then what? Do the simple math here. We want to sell this. So if we can sell for 120, $1.20, and then cost basis was 13, so we'd lower it to 11.8, and then if it went up to 12.5, then we would sell, so that would make sense. We're gonna go ahead and do that. Four contracts of that. See if that hits. Hopefully it does, because I want to do something with the GIVO. GIVO covered call. And okay. And how are we doing now? Going back down a little bit, not all that much from what it was, but we can see the spark line, it's starting to turn a little bit. So let's just bide our time. Not do anything too crazy. We could try to get an edge on this, although it would only be 200 days out. That's the furthest we can do. So it's basically S&P growth. So I mean, we could do what with this put? See, these are also expensive though, $75. Although that is the 30 put, that's not that far away. So kind of would make sense, but just wish that was a little bit cheaper. I mean, you can see the $35 one is up 80% today. These are definitely moving. I'm happy with the hedges we got so far. I mean, not all that gonna be that much. I would like to get it some more, but I guess we could look into the TQQQ. Those are not, it's not that expensive. It's only $90. Then we could go 333 days out, which is usually what I like to do. But even $10, it's pretty expensive. So that one could be worth it for me just because. Yeah. Just because I have a bunch of these. I have 1,000 shares actually, so I could probably pick 10 of these. TQQ puts, taller 10. I don't want to set it at 10. I'll set one for 70 though. Maybe 60. I mean, we're gonna lose money on that. So this is $600, so I'm not that worried if it fills. We're gonna go ahead and try to see. Let's look at the quote real quick. So we got a bunch. We got 368 that are trying to sell for $1.10. People own these already. See, that's the smart thing to do. Buy them when everything's up, because on days like today, you could probably make 100%. But nevertheless, we're just gonna play it a little bit safe and go ahead and pick some up. 10 of these for me is not a very expensive, so I'll try to get some of those. And since I have so many, I literally have more than 1,000 shares of this. But it's not going to hedge it very well though, because the max profit is only 9,400. But still, it's something though. Okay, my GIVO just filled. The selling the covered calls of the GIVO just filled at $1.20 times 4, so at least we got something there. And hopefully that one just, I could make a little bit on those actually, even though I'm down so much, because I can lower my cost basis and hopefully it goes up a little bit. IV is quite high. Yeah, I mean it's a 76, but I kind of would expect that. I'm not really interested in those because I mean, what are you gonna do? 115 days, we could think about something like this, and then every 115 days we could re-up it. Still, one costs $25. If it does just crash crazy, it's saying the max profit is 975. I assume if that's basically if TQQ goes to zero. So I'm down 6.5%. It's better than it was. I'm not all that upset about that. You know, it is what it is. And then so okay, so we got the GVO covered calls. We just got into we're trying to dollar cost average into some interesting things. We picked up, you know, $5,000-6,000 of hedge. And we've got got another limit order for a Dow hedge. Nano, we're down 13%. It's not that bad. This was a free one I got. The print, we're down 7. It's not that bad. We got another limit order in too. If it drops further, we'll buy more. I think 25 or so. The ACIC, we're down a little bit more. Let's look at that one. It is down 12% today. And we're only down 18, so not that bad in my opinion. It was down more, of course. But I could buy another 25 because remember, how many of these do we have already? Well, we can look at it right here. We have 50. So once we get 100 of these, we can start selling covered calls. I'll buy on the way down. It's fine, I think. I don't want to do the put thing, although it doesn't really matter. You could sell puts, you could buy. I just try to do little by little. I don't want to just do 100 because selling one put is for 100 shares. I don't want to do that at one price. I'd prefer to ease my way into it. Okay, good for you, Spud Monk. That's a great move. That's a really good move. So yeah, that's what I'm thinking about. I'm gonna ease my way into this. So if it goes down to, let's just say 13, I'm already gonna lower my cost basis a decent amount. So it could be interesting. Really, the question is right now, what should I put my limit order? I mean, $13 at 25 is not bad. I'm in forced day. I know would like to just do TTC on that. And let's get that posted on the Twitter. What was that for? ACIC? That's cool. We'll see. We'll see if it hits. It'll lower our cost basis by only $1, so it's not a bad. And then if it falls further, we can buy another 25, and then hey, we got 100. And then we can start lowering our cost basis, consistently selling the covered calls. But anyways, oh cool, 5.5%. What's going on? Oh, it's the Nasdaq. Tesla's coming up. Nice. Tesla, Nasdaq, S&P is coming up. Good, good. I'm not sure specifically what we're looking out for. I didn't have enough time to look into it so much, but just for something that's not good. Could be the raising of interest rates, or really, I would say something like that. Just don't know what to expect. Tesla's recovering nicely. Anyways, feels good, feels good. I mean, I'm still down a decent because I'm got all these 3X's, but oof, it's definitely better. We were down 11, more than 11% when it opened. Anyways, hopefully that holds and keeps going up. But anyways, continue dollar cost averaging while it's going up. Once it shows some signs of life, it feels a little bit better at least. Because hey, we miss 1 or 2%, it's not a big deal in the long run. But our options are suffering mostly because of all of those backwards covered puts that we're in. We can give them a little bit of time. Hopefully they turn around, which they could. One specifically is Lee. Have a 29.5 strike. And that's this Friday. I won't get assigned 400 shares at 29.5. And how much did I make on it? Made $1.50, so $28 would be my cost basis. So it is what it is. It's only 26. It's not that bad. But, you know, I like Lee, to be honest with you. I don't know if you guys saw, I posted on Twitter I saw this baby blue Neo ES8, I believe, and then I saw the baby blue Lee parked right next to each other when I was walking outside a couple hours ago. And I like the Lees better, to be honest with you. Anyways, the Reggie's at 6%, so it's coming back up. It's turning green. It's still gapped down, but at least it's turning green. So that should be nice. Do we dare throw another one into that right now? Nah, because I'm selling a put. I'm going to get smashed on it, although I sold it at strike 95. Oh, I got $7 for that. Oh, I'm cool then. Yeah. I got $7 for it, so my cost basis is 80, 88. Oh yeah, we're fine on that. That's cool. Um, Currently I could sell it for $11. That's a well, that's a March though. Hmm, interesting. Yeah, I don't really want to do that. I'm more than 100 shares. I'm not really interested because those are, dude, it's a nice chunk of change. Anyways, we're just gonna let that ride. I mean, literally, we're down. The unrealized loss is 60%, but this doesn't matter because we got paid the $700, so we still have the $700. The Lee, though, it's definitely sucks more, but that's okay. We're only, it's $26 right now, and cost basis is $28, so it's not that bad. And then our puts are definitely losing money now, the hedges, because things are moving up. So that makes sense. But of course, those are long term. Those are not until January 2022. So that's just an insurance policy. Don't even pay attention to that, I guess. And the orders, that was still working. We got ACIC 25, print 25, the Dow Jones hedge for 50, another XLK hedge for 100 more. Of course, the realty income. I don't want to put more into that, to be honest with you, than just 17 shares, but that was just my dividends that I made the past year. So since they don't have drip, I just buy them manually. But anyways, the ARC-G, ARC-F, ARC-W, we have one of those each working. Don't know if it's going to hit because things are going pretty good. Still holding the SB? No, I'm not. I closed those. Any plays on AMC? No. I'm not interested in doing that. It's too volatile. The IV is insane. 500%, guys. But anyways, you could sell covered calls. Let's see. Oh, those are puts, sorry. The calls is 390% IV. You could always sell it, the covered calls. If you're going to do anything with it, I would be doing that. Because you can get paid what? Well, if you start off with a put, if you don't own any shares, you could sell for $7, lower your cost basis by 73 cents. 74 cents. You're into like 625 would be your cost basis. Then you get 100 shares. Then you'd go ahead and do a call. That's only 3 days, by the way. And you'd go ahead and do a call at 7, yeah, $8, lower it by another 30, so that's 5.95. You got a cost basis. Oh, and that was 3 days. I mean, it was more than that since the first one expired, but another 50 cents. You could, within 10 days, you could lower your cost basis theoretically down to the upper fives. So yeah, if you're gonna do anything, you can do that. And let's see, what else could we do? Just kind of writing this out. See what's going on. I mean, like I said, I think we're lucky if we can get out of this down 5% on my portfolio. I would consider myself lucky if we get out of this day. So hopefully the rest of today's market is going to be nice. Hopefully they don't screw us over here. Well, I guess I could probably roll the Tesla covered call. Because I mean it's because think about let me think about this. The Tesla one I could close out, I'd have to buy it back for 74. So I'm still made money on that. And then I go because it's at the 820. That's so far away. Yeah, let's go ahead and do that. Close this. I'm gonna roll this out. Just try to get some more money. Oh, I'd have to buy that back at 83. Let me modify this real quick. Okay, that filled. Okay, so I'm out of that. So I bought it back for $80. I still netted 200 something dollars profit. And now I'm gonna go over to good old Tesla, and I'm going to go look at maybe March 5th expiration or even the 3rd short. Then I could sell it for no, let's see, 10 days. Could sell it for $775, almost $100 up. You get $500. $765. I mean, what's the break even on that? 13%. 13% in 10 days. It's possible. But I would probably feel more comfortable doing $100. So if we went ahead and sold this, I definitely would be netting. So we're gonna go ahead and ask 6 for this. That's $600 we can make in 10 days. Let's go ahead and do that. So yeah, I mean I can wait until the day that it goes up, and then those premiums would be more expensive. But we'll see if it can get filled for 6. So let's see. Okay, so my Tesla just filled. So yep, so just made $600 on that. So it's not that much considering how much Tesla costs, but only um it's only 10 days till expiration, so that's fine. So if we take a look at this, I bought the position back and I had to buy it back for like $80, but I netted about 230. And then I just went ahead and sold it for 600 again, so 230 plus 600. So I just closed like $830 of profit right there. And we'll see this one. This one's at a strike is 785, so that's $100 up. And I have it 10 days, so we'll see. Might have to. Hey Tim, ni hao. How are you doing? So yeah, but anyways, everything's on the up and up. I mean, this is turning out to be not as bad as I initially thought I was gonna be, because you can see the spark line. Things are moving up, so we'll just have to keep waiting. Yeah, those XLK puts are up 200% for the day. Mine are not because we bought them later, but technically for today, from yesterday till today, they're up 200%. So thing is, you buy those when everything's going up, and people will want to buy them. I mean, that's pretty much all we can do, and that's kind of all I want to do because I don't want to overtrade, and I mean, we're still taking a pretty big hit, so we don't want to do too many crazy things, like on the the daily write up journey to a million in the YouTube video. Hopefully, you guys check that out. I would appreciate that. Yeah, I didn't add any new ones to the watch list because in times like this, it's not the best idea to be getting into short midterm options positions. About 200 more shares of ZOM at 160 to cost average 190 a share, and it bounced back to over 190 a share again. There we go, Ed. You're doing excellent, my man. That's how you do it. Patience. Wait for things to fall. Okay, it falls, it falls. Buy some more. Wait for it to go up. It's really just patience and timing is the key. If you're always in a rush and try to overtrade and overdo it, it's not good. You're gonna do too many things. Too many things is not necessarily good. Better is just have some patience, wait it out. All we gotta do. And looking at all this red, looks like we're gonna have to have a lot of patience. So yeah, because my portfolio has pulled back to the amount that I was at when I transferred over to Webull initially. So that was like a month or two ago or something. So ain't making any money, but it's okay. See what else is interesting. Print's coming back up. I mean, we could start considering to sell some of these short-term swing plays, even though they're common stock. I wouldn't be opposed to it. The print I would like to hold a little bit longer. I still want to raise capital. To be honest with you, still wouldn't mind raising. And also picking up some more of those cheap hedges. I mean, we're not doing anything with any of these arcs. Unless it's selling the ARC W. I mean, we could pull a 4.5% profit right now. We only held those not very long, like a month or so. Probably some of you guys, some of the OGs remember when I bought those, but we could flip a 4.5% profit, and since we're getting so many of these leaps anyways, we don't really need it. Because I mean, this ARC W160 leap, that's $3,400 already, and this, well, it's not a leap, it's a longer term option. But the delta on that was like a 60-70 anyways. I mean, we don't really need these 30 shares for 5,000. It doesn't really make sense. We could take the 5,000 and we could save 1,600 and just get another one of these for 3,400 right now. You know what I mean? But that's probably the smart thing to do. But indecisiveness is kind of getting in the way right now because it's okay to hold it as well. 5.5% is not all that much. I mean, we're only gonna make $200, so it's not like it's a big decision. I just don't really like to sell things. 5.5% profit's not anything amazing. But yeah, we're looking pretty good overall. Ford doing all right. And those are actually ones I got for free from you guys. So I really appreciate you guys using my link. If you don't know what platform this is, let me just go ahead and plug it. This is Webull. It's actually really good. I like it a lot. And a lot of people are moving over to it right now. And there's a really good research and tools and charting, news section. Everything's just so streamlined. And I find myself going to Market Watch to look for the news earlier. And it's like totally learned nothing there. Just came back to Webull. Just reading specifically on each stock. So if you guys are interested, go ahead and use that link in the description. And you're going to get 2 free stocks guaranteed if you deposit $100 only. So it's a pretty good ROI. It's like 20% ROI. But anyways, what else? My O. Man, this one's looking pretty nice. Because this one doesn't move very much. So in times like this, it's interesting, but see. The limit order I have for that is at dollars. So it needs to dip a little bit more, but it can take maybe a couple days. We'll see though, unless it just is in this new trend line. We'll see if it holds 61.36. We'll see if it holds that. I doubted them. So let's look for something interesting to do. Yeah, Canada can't use it, no. And anything is good besides Robinhood, basically. Robinhood is really good for just buy and hold, forget about it, don't care, or whatever. Just put some acorns in it. Really, might as well just use acorn. If you don't know what acorns is, it's for people that want to invest just a few dollars or something. But anyways, we're up at 5% right now, so this is the point where like I said, I consider myself lucky to get out of this day only down 5%. I mean, yeah, I don't necessarily want to buy any more hedges right now. Although we do have the limit orders. If it happens, it happens. I would like to raise capital. We have these pending right now. That's, I guess, it's the opposite of raising capital. I mean, we could raise capital by cutting some of these covered puts off. Would take a loss. But I don't really want to do that though. Because I think we just get a sign and we're going to come out pretty nice. So, yeah. Anyways. What's Bitcoin doing? 49? Gosh, that's just the thing that I'm just start to get concerned, to be honest with you, because about Tesla, because it's so exposed to Bitcoin. I don't know how much it would affect it, but Bitcoin is down 3% right now. For sure the markets are crashing, but they own a lot of Bitcoin. 1.5 billion, and it is worth more money now. So I just don't know what to think about that. I need to think about it more. It seems like Bitcoin's holding the middle Bollinger Band right now. So that could be interesting. I mean, it's $50,000. It's just so hard to motivate myself to buy Bitcoin when it's $50,000. And the first time I bought Bitcoin, it was like 200. Now that's just pennies on the just peanuts, just begging for peanuts. $200 can go up and down in a minute. Webull iPhone app, yeah, it's good. I don't use it. I just use desktop because I do this full time, so I just always use desktop. But I'll check the prices and everything, and every now and again on the Webull app. Never had any problems. CCIV down on the merger, isn't it supposed to be good? I know, but it was priced in already. That's the thing. And that's what I was telling you guys. You got to be careful that those things are priced in. I said, if you were paying attention on the live streams and everything, guys, follow on everything and turn the notifications on. Come on. But if you were listening to me, I was saying start taking your profits when it got to 50. Gosh. Well, the thing is, it's on the support now and it's coming back up. So it could be a good time to buy it, guys. Especially dollar cost average. If you're backwards, you might as well at this point. If you have 100 shares, sell covered calls to get some money back at this point. Wait for it to go back up to 50, 60 and possibly get out of it. And then once it merges into changes into Lucid or whatever, then we could buy those shares. Don't have to always just hold them. We can come in and out, but yeah, it was priced in. So when you're seeing it was running up here, is like this was like, oh man, it's because see it's so flat. So the SPAC is basically like, okay, the company is looking for someone to merge with, looking for someone to merge with, looking for someone to merge with, because they got all this money and they're thinking about investing it in some company, buying some company or whatever. And so here is the point where it's like, oh man, the rumor's starting. Maybe it's gonna merge with Lucid. Wow, man, this is gonna be a really expensive SPAC if this merges with Lucid and then just takes off. And once it got up to 50, I'm thinking like, well, like after this big day right here, biggest day it had, I was starting to say, take all the profits or at least start taking the profits. Because the worst case scenario, you can buy it again once it falls back down. And sure enough, it did. Could be an interesting buy. I don't want to mess with it though. It's too volatile. The market is already so volatile. I don't. Whoa, up to 3.5%. Holy crap. That's awesome. Man, that was a turnaround. Almost 89% turnaround for me. Crazy. I bet you it's probably because of Tesla. Oof, love-hate relationship. Yeah, it's over 700 now. Look at that. Should be buying it. And sell the covered calls, but I mean... anyways. Yeah, how's the good old Alibaba doing? Is Jack Ma still here or did he disappear? Disappeared. Still sucks though if you look at it as below the 180. Not interested in that. AMD is just dragging its feet. Apple is at 123, but things are bouncing up. Oh, that would look really pretty though, right there. Yeah, hit right on that. That bottom wick was right on the 180. Um, Apple. Down, 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 down. Anyways, let's see what else we got. ETH getting killed on ETH. Soxel's only down 4% now. That's great. It was down like 10, 11, Lee's coming back. It's at 26.7. So that's really good news for us because we're getting assigned at 29.5 minus 1.5. Yep, 1.5. So our cost basis would be 27. Heck yeah, we could break even on this. You know what? When these corrections happen, breaking even, it's pretty nice feeling. Nasdaq's only down 1% right now. Turned out to be not so bad, but it dipped below the 50-day moving average. This was a big one. Gap down. Gap down here, gap down here. I mean, crazy. Tesla was literally down 10%. It's only down 2% for the day. Are all semiconductor ETFs generally safe? Read an article that said chip shortage could last. Yeah. Exactly. I mean, for sure, go in on some semis if you're not. I've already got such a big position in them, so I don't want any more, but sometimes I'd take some smaller ones, but for sure, it's a good opportunity. And they're down a lot, especially SOXL. That's what I was saying. Someone asked if you had $1,000, what should you invest it in? No, I'm pretty sure I said SOXL, TQQQ, TECL. That's the thing to be doing right now. But as you can see, bouncing off the 50-day moving average, it's an interesting support level actually for these. Huh. But anyways, so if that holds, I'm gonna be pretty happy. This line needs to go down a little bit. Delete that and redraw it. So right here, right around here. Yeah. That looks good because the wick is actually under it. The fat part of the candle was sitting on it. That's pretty good. Vanguard doesn't let you buy leveraged ETFs, so it's okay. Don't need to get into that anyways. Not for everybody. Because they can go up by 10% one day. They can go down by 10% one day. Like today. And yesterday. But I mean we're still down a decent amount, but I'm looking at this right here and I'm seeing hope, so but don't be fooled. We could have a new trend right here. So this, let's just say if this support, come on, drag this out a little bit more. That's fine. So let's just say this is the support. I mean, we could be looking at till April, beginning of April, until a full recovery from this. Let's see. Let's just see. But I mean, that's okay with me. The Tesla comeback, yep. More than 700. I mean, it could take some while to recover from this. And remember, the 3x ETFs, they have drag. So I haven't explained this in a while, but it's basically the leveraged ETFs, if they go down X%, then they need to come up more than the 1x counterparts. So for example, let's say, let's say we're looking at something and the let's just say SMH. SMH fell by 10%, which obviously that's a lot, but let's just say keep the numbers nice. So let's say SMH fell by 10%, and then the 3x counterpart SOXL would fall by 30%. So basically, if it's $100, so if SOXL is $100, let's say, and then it fell by 30%, so it would go down to $70, right? But then to come back up to $100, well, you see what I'm saying? It would take more than that, because think about it. If the other one, the SMH, if it fell to 10%, so if it was, let's say, if it was $100, the SMH, it fell 10%, so then it was $90, and then $90 to recover back to 100 is what would it need to go up? 10, so it'd be $10 up again divided by 90. So it would actually, the SMH would actually fall 10%, and it would need to go back up 11.1%. But the SOXL would have to go up times 3 that. So it would be 33%. So false 30 would be 33. So it would be even more that would have to go up. You see what I mean? And then let's just say if it fell to 100 to 70, the 3x one. So then it would need to come back up $30. So 30 divided by 70, that's actually 42%. See what I'm saying? So actually, if the SMH went down by $10, and then it needs to go up $10, but then it's down 10%, but it needs to go up to 11% to recover. So if it did recover to 11%, the 3x version would only go up 33% because 11 times 3 is 33. But actually, if it was down to, if the SOXL was down to 70, and then it went up by 33%, let's say, that's only $93. It didn't fully recover. To fully recover, it needs to go up by 42%. You see what I'm saying? So there's a drag. Zach, do you take profits from this account for your living expenses, or how are you generating your income for living expense? Yeah, I mean, not much, but I have taken profits before, and I like bought a house or something, and trade, and I have other streams of income, but I don't take much though. I try not to. The goal is try not to. Zach, what are you doing with the cash secured puts you sold that are in the money below the break even that is? So I'm just gonna wait and get assigned. I'm not gonna close them. I'm not gonna buy them back and take a huge loss. So, I mean, let's look at one. The Reggie. So it's seven. I bought it. I sold it for $7, so I got $700, and then I'd have to buy it back for $980. I'm actually gonna lose $280 if I buy it back. I don't want to do that. So if I get assigned at 95, but $95 I would have to buy it for, and then minus $7, so my cost basis is 88. And the current market price for Reggie is $94. So if I get assigned, my cost basis is gonna be 88 though. I don't want to. Why would I close it? The Lee one is cutting a little bit close because my break even is 20. My cost basis would be lower to 27, and it's 26.64. So I'm almost at break even. So I don't want to. I will just get assigned. To answer your question, I think market is turning around. To be honest with you, yeah. What are my main streams of income? I mean, I'm in crypto. I do the stocks. I do consulting. I do a lot of things. I have some rental property. I mean, but mostly I'm doing stocks. So I just try not to sell so much. What if Reggie goes below 88? Then I'd have to hold it, and then I would once I get assigned, then I would sell a covered call on Reggie. So for example, I can lower my cost basis even more. So go back to the Reggie here. So let's say if it dips below 88, then I would just go to the calls. I would sell a covered call. I don't know. Let's just say $90, or let's say $95 or whatever. $90, that's a nice number. I could get $10, $9.20. Say we set a limit order for 10 and it fills. I can get $10. So if it's my cost basis is 88, and then I sell this, once I get assigned those 100 shares, I have to buy them, and I'm going to lower my cost basis another $10 from 88 to 78. So it can dip down to 78 would actually be my break even, if that makes sense. Please share how you live life as a professional trader when the income stream is unknown, especially in the bear market. So pretty much, look, I would, okay, so you have the long-term capital gains tax is after 12 months. is 15%. So you sell some things that you made money on, that's your 6 months or 12 months living expense at that point, and then you live on it for you don't be an idiot. You just be frugal, make a budget, and live off of some cash that you've had in reserves for your life money or your expenditures for the 6 to 12 months. And actually, in theory, we don't really need to pay income taxes, which could be 20, 30, 40%, even 50% if you live in California, depending on your income level. So I mean, if you're working with around the capital gains, long-term capital gains tax of 15%. So in practice, you would wait until sell something after 12 months, so the tax is less, and then sell enough of it. So every year or every 13, 14, 15 months, you would just sell enough to last you for 6 to 12 months, pretty much like that. But of course, if you're doing some day trading, like options, for example, I don't know, maybe I would cash out some options if I'm up a couple $1,000. If I made $10,000 in a couple months, and maybe I would take it out because I'm gonna have to pay the taxes anyways. But usually I would just reinvest and then cash out at about a year. But also you could have streams of income in rental property, for example. You made my XLK hedge just filled at 35 cents. If you lost my train of thought. So if you, for example, made $100,000, $200,000, even $100,000, you can buy a small condo in a decent location, which I just did, and you can rent it out. I don't know, $900, $1,200 a month, something like that. Depends on how nice the inside is, the decoration, or whatever. So I mean, you can have another stream of income like that, which is not that much money, but it's not bad. And then also do a little trading of crypto and get a little bit at least, pretty much like that. You could put some in dividend stock. You could put enough of it once you build up an account, and like let's just say in theory you built up $400,000. I know that might be really far away from some of you guys, but if you're thinking about doing this full time, I mean, kind of gonna need a little bit more than $10,000. You know what I mean? To live off of this, because I mean, you can just straight up live off of the growth if you want, like I was talking about before. But also, you could put it in a dividend stock. You can make, around 8% conservatively per year. I mean, if you build up like just say $400,000, you could put $300,000 in it. This is like really safe thing to do, though. You could make some money every year. 8% is conservative. You could probably get 10, 12. It's a nice little teacher salary, basically. And you wouldn't have to pay much taxes on it. You would probably even just be better off paying income taxes at that income tax bracket level. You know what I mean? So you'd have to think about those things. But really, I'm not a tax professional. Don't listen to anything I'm saying about taxes. This is just what I do personally. But I might not be doing it the right way, so don't listen to me about taxes. But yeah, I mean, just the point is get some different income streams. Try to get a rental property, because you don't want to have all your apples in the stock market. Once you make some money, buy yourself a house, pay it off. You can live there and trade for free. You pretty much just need to pay for food. If it's a really bad month, you can even just burn some candles. You don't even need to turn the lights on. So so I would recommend doing that first. And if you're a single guy or gal and you're young, get a small condo. Make your costs so low. Just trade full time. Like, that would be the best thing. It's your home and it's your office. And if you could be cheap. The minimum to start to live by investing, I would say at least 100,000. I would say at least 100,000. And that's just going to be growth. You ain't going to make anything with dividends. Even if you had a decent dividend stock, just trying to play it safe, even $300,000 ain't going to make you very much. I wouldn't be surprised if we closed real close to open green. Yeah, I know. Nathan. Sorry, guys. I've got some congested throat for some reason, but yeah, I mean that would be wonderful. How are we at right now? Oh, I'm still down 4, but that's better. I was considering myself lucky if I'm only down 5 though. So hopefully it does come back up. There's no real reason why it should crash. Number one, the stimulus is coming. That will prop the economy up, or the stock market up, even though it's probably not a good idea to be printing money. But it should hold up for at least another year, I'd say. I don't think there's any real reason here for it to crash. It's just a pullback, as you can see. Just it pulls back sometimes, guys. That was a bad one. That was a bad one. This one, if it does go up today and then it continues, I mean, in the upward direction, you can consider yourself lucky that you survived. But I mean, seriously though, those options positions got smashed. That's what happens. That's just what happens. Like my options today are actually down 87, but how is that? Must be taking into account, like for example, my Lee, since it's down 8,500, or sorry, $850, but that's unrealized, and I'm not going to rebuy it, so I wouldn't lose that. I don't know what, and that's, yeah, I mean, I don't know really. Don't really know. But anyways, I'm not really sure how they're calculating this, but I mean, what all did we lose a lot of money on though? This Art K is only down $90. That's kind of amazing. The XLK puts, oh yeah, down 3,500. Oh, that makes sense. This was the hedge. See, that's the thing, is gonna be hard to take this seriously because this is my insurance policy. It is going to fluctuate a lot, but I wanted to take that because better than not taking it, in my opinion, just in case, you know. And hey, if it does have in the next correction, these are probably going to go back up and we could probably at least get all our money back. And if it did have a really big crash, then you know we could make a lot on those, but we'll see. I will keep those forever. Just I'm already chalking this up to a, well, the XLK was 4,600. I paid for it. The SMH I paid 850. So that's the market value actually. That's not how much I paid. Yep, the total cost was 8,000 for the XLK. Oh yeah, because I just bought another 100. For sure. Yep, 80, 100. Yep, that's $10,000. For sure, that's $10,000 exactly. Yeah. So I chalked that up to a loss already, but you know, that's kind of what insurance is. Need to dig more about how to work around the taxes. Yeah, I mean, look. In my opinion, it's rather simple to understand because pretty much if you sell, like whatever your income tax bracket is, that's easy to Google. Just Google your salary or like how much money you make, and then your state and then federal, like where you live. Just you can easily find how much taxes you're gonna pay. Not to mention, I'm doing my taxes right now, and probably you guys are too, so it's probably fresh. And then if you sell something more than 12 months, that's long-term capital gains. That's 15%. Unless you're like a millionaire, multi-millionaire, and your income is like, I think it was like $400,000 or $500,000 a year income. And then I think the long-term capital gains is taxed at 20%. But you know, anyways, so it's kind of simple. Like 90%, 80-90% of your portfolio should already be long-term holds. You're not really planning on selling those anyways. If the things go down, you buy more. So you just got to keep track of when you're buying these things and when you can sell them. That's pretty easy to do. You just look on your broker or whatever. So, you know, not so complicated. Just kind of 90% of your portfolio, in my opinion, should already be long term that you're not going to sell. So don't sell it until long time. You don't get taxed until you sell it. All right. Still down 4%. So what about yesterday and today? Oof. Yeah, it was a pretty big dip for me. But in theory, it should bounce back on. Let's look at just NASDAQ, whatever. Look at the NASDAQ. Theory, we could see it bounce back in by April. That's like a month. I think that would be at worst case. Well, I mean, it's not the worst case. The worst case, it could just everything could just fall, and then our puts would be so much money. What are your thoughts on BlockFi paying 8.6% on GUSD? Yeah, I wouldn't. Yeah, I mean, it's okay. I've done things like that before, and you know, man, I really got into the DeFi, the decentralized finance. We had some crazy strategies going on for one point with Cream.finance and the Urine Finance and stuff like that. So the 8% is all not all that high, but you could literally, depending on your location, you can literally put it in um finance and get pretty much like that. Let me check. See what they're paying. And I would consider that a little bit more safe. But I mean, there's no real reason to consider any of those things safe. But if you're gonna choose one, then Tesla 820 calls filled. What 820 calls? See on Binance, you go over to the savings. On Bitcoin, you can get 1.2% right now. You can get, and it's not locked in or anything like that. You can get 6% on. Doesn't matter if it's USDT or BUSD. Already there's that, and that's not even locked in. You can get a lot different. Depends on what coin you want to hold. You can pretty much get interest. You can get 10% on Bake. One of the higher ones I see. Doge, you can even get 5%. But I mean, you know, it's not hard to get those type of numbers, and that's not even locking it in. If you lock it, it's going to be even higher. You can lock USDT for 90 days. You can get 7%. So, yep, USDT, BUSD. So, yeah, those things are not all that bad. Yeah, my options are really. Oh, I see. Because my hedges are really bringing it down. Actually, it's going up more, but because I got the hedges for $10,000 down, and down probably 553. Oh yeah, down more than half. Interesting. Yeah. Well, we'll see about that. Because what, they're going for 17, 19 cents now? Huh. Definitely better to buy them at 17 and 19 cents. But I mean, because if you did it, I don't assume it could go much lower than that. We could just dollar cost average in there real quick. But I'm not really in a rush though. We'll see how that goes. But this is a little bit misleading because, at least for myself, because that was I knew that was going to go down if it market's going up. I don't know how to feel about that, but I kind of just already got ready to write off the 10,000 in losses because hopefully the market doesn't really go down. Yeah, always better to minimize living expenses. The 820 on Twitter, 820 calls for 70 cents? I think you mean I was closing that position. I wasn't buying them. But yeah, okay. Yeah, be careful. I wasn't buying those. I was buying to close because that was a covered call I sold. But you can buy them. It's cheap. It's only $70. So yeah, it could hit 820. I mean, it's already past 100. I already passed 700. Gotta be careful with that though. Could you elaborate a little? What's the difference between Bitcoin and Bitcoin Cash? Yeah, Bitcoin Cash was a fork of Bitcoin, so it's not Bitcoin. Although the people that are really into Bitcoin Cash, they think it's Bitcoin. They say it's closer to Satoshi Nakamoto's vision for Bitcoin. Yeah. I don't know if you guys know who Satoshi Nakamoto is. I have this one really interesting story that I feel like I might have met Satoshi Nakamoto one time when I was deep into the Bitcoin mining business. Bitcoin would be the better investment vehicle for sure. Yeah, this solo, it's could close that and reopen it. Not a bad idea. Limit price put in for what? See what we can get filled at. We can roll out the solo. Okay, so this is I'm buying to close this position. So if you see this on Twitter, I am not buying this call. Although you could, it's so cheap. But I'm not planning on buying this call. I am buy to close covered call. And that already got filled. So now my solo is unlocked. And now I would like to go over to the solo and see if I can sell another covered call. It's down a lot. But yeah, we could go out 17 days or so. Calls, we could sell the covered call at my cost basis here though. My cost basis is 8. My cost basis is $8, so I don't want to do it for less than $8. That's true, huh? But if I could do 37 days out, is it interesting? A little bit. Could do the $8 here for 71. Could lower it down. I'm interested a little bit. We want to go ahead and sell. Well, it's only 66 cents. It's not much. 7.5 I could sell. Ethereum Classic. No, I would just do Ethereum and Bitcoin. I would do 60% of your portfolio in Bitcoin, 30% ETH, and then whatever. Other ones you want to split it up, but I mean, that's only if you want to invest in those things, anyways. It's not for everybody. But I would just stick with Bitcoin and ETH. So let's see. Yeah, this is decent times to be selling these things, though. I mean, if we get 6.51, get a sign, but my cost basis is $8. I'm trying to find a happy medium here. 24 days out. 7.5. This would break even over here. Sell for 66. Yeah. And if it doesn't hit 7.5, then we do it again. Well. Wonder if there's any new. Looks like the speech is going on now. Powell testifies as focus on economic pain persists. Powell says inflation is still soft, and the Fed is committed to current policy stance. So it seems good. Just from reading the headlines, I didn't go into it though. But anyways. Yeah, nevertheless. What else can we do? I mean, there ain't much to do. Yeah, it's dropping back down. Oof. Dropped down a %1.5 for me. Why? I think they're just going back down a little bit. Yep. Well, I mean, there's nothing else we can do. I mean, because. So if that's dropping back down, my hedges should be doing better, no? Huh. Anyways, keep watching those. And it's really low volume, so you know this. I mean, a lot lower volume than a lot of the other things because they're so far out of the money. But you know, so that's not gonna really update. No, people aren't gonna be making those orders because this only updates the last price if someone actually buys it. But anyways, so we're down on that, but that's pretty much expected if the market recovers. But we'll see though. We'll see. We'll see how that goes. We're kind of just testing it out. Anyways, not much we can do. The order's working. We sell the solar cover call. Hopefully that gets a sign we can pick up $66 more, and then eventually move up to $7.50, and then we would get assigned and sell our solar. We'd be out of that. That'd be pretty good actually. In a time like this, and when solar has gone down a lot, I would say consider ourselves lucky with that. The Atlas Crest 25 more, print 25 more. The Dow Jones, but I don't really want to do that anymore though. Yep, I don't want to cancel that because it's 37. And I just saw those other ones drop, so I'm not really interested. ARCG, we're still trying to dollar cost average. So if we get those, it's good. If the market goes up, and then it's also good. So yeah, I think that's about it. Not much really. Why Tesla and Apple are going down? Well, beside the world ending, I guess. Tesla is going down, I assume, because they have a lot of exposure to Bitcoin right now, and Bitcoin's down a lot. But overall, not just that, but for both of them, right now is a period of money flowing out of tech and into more traditional, safer, quote unquote, safer investments. Like, could be retail, could be oil, could be commodities and things like that. Today might be a good day to pick up some commodity. Will benefit from the stimulus. Yeah, I know. I'm thinking about it, but I'm not really into it. I still believe in the tech. I mean, it's the future, and I'm also not really looking to get into so many positions. I just kind of want a dollar cost average in my tech stocks, to be honest. Although it could be good. I'm not gonna lie, it could be good. I mean, I just don't want to buy it right now and then have it go down. That would be one of the things that I'm considering because, yeah, I mean, things are pulling back. We could take like a ERX. It's kind of like an energy play we could do here. Well, yeah, but even this is down. Not down that much though. The FNGU is down a lot. The Dow is down. Everything is down. My worst one is SOXL. Go figure as always. You ever trade futures? I have before. I have. I used to a decent amount, but not anymore. At least not right now. But we could. We could. It's a lot more risky though. A lot. Anyways, guys, I appreciate you. Appreciate everybody hanging out with me. I think we had a pretty good time. Let's see how many subscribers we have. If you're not already subscribed, please go ahead and do that. We have 700, more than 1100. Oh, okay. My 25 shares of ACIC field. Nice. $13. That's cool. Now we could put another order in ACIC. See how much that lowered our cost basis. I think it was 16.25 if I remember. This one's taking a big hit. Yeah, it was 16.25. Now it's 15. So that's cool. We could put in another one. Another 25, I believe. We could try to do it at $12. See if we're lucky. So time and force. BTC. Let's do it. All right, this is probably going to be the last one. Thanks, guys. Appreciate it. Appreciate all you guys hanging out. It was always fun, although today not that fun. But hey, things are going to get better. And it looks like things are relatively moving up. My hedge is probably just improved. I mean, yeah, my XLK did. What you gonna do? Looks like someone got billed for 24 cents. If anybody's interested in those, time to buy is now. And just kind of hold them. Although I wish I could put them in a different section here because kind of messing up my stuff. Because I just chalk that up to an insurance. I don't think about cash value is like including my home insurance or my car insurance. Those are just like, okay, that money is gone. Forget about the entire thing. Unless I need to use it, but it is what it is. But anyways, guys, check out all the links. If you appreciate what we're doing, make sure you're subscribed. We've got, what did I say before I got sidetracked? 1166, so we're going up. We're getting up there. We need some more watch hours, but hey, we're going fast. The Discord is crazy big now. We have over 900 in the Discord. Pretty sure. Let's check. Oh no, we only have 877. I think Sky went through and deleted a bunch of spam and stuff. If you guys get any spammers in the Discord, let me know about that. We'll take care of it. But anyways, guys, appreciate you guys, and hopefully everybody's doing all right. Don't feel too bad. Walk away from your screens. Don't focus on it too much. Give it a little bit of time.